Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in to this late edition of Macro Mondays. Yes, this is being recorded on the late evening of Monday, February 10th, 2025. And in this video, I'm going to talk about one of my favorite subjects, gold against the stock market. Folks, gold against the S&P 500, this ratio is getting ready to test 4-year resistance. And we know that if that breaks out and really sustains it, that's going to set the stage for gold to run to not just 3,500, but 4,000, 5,000 over the next few years. This is the number one key for gold and silver as well, and the entire precious metals complex to really accelerate to the upside. Let's get into some charts. Okay, so first we're looking at gold against all the various asset classes, gold against the stock market here, gold against commodities. This is an equal weighted ETF of commodities, gold against bonds, TLT, and gold here, gold against foreign currencies. And so this is gold against the inverse of the US dollar basket. And this vertical line marks the cup and handle 13-year breakout for nominal gold that occurred in March of 2024. And so what's going on now with respect to gold against the various asset classes and all these things here in this chart? Gold's outperforming everything except the stock market. I mean, we can see the stock market, gold against the stock market had this big pop with the initial breakout in gold here. This move gave gold this big pop against the stock market. But we can see since then it's just gone sideways. You have this clear resistance here at 0.50. I mean, this is so important. And dating back to the beginning of 2021, if this were to break out right now, that's breaking out of a 4-year base. So if this takes 6 months, if it takes half the year, that's a breaking out of a 4.5-year base. So this has come up to first resistance here at 0.48. So a little move higher, just a test of 0.50 would put the ratio at really close to a 2-year high. Or like it would be like a 1.9-year high if that happened in the next few weeks. So this is the key to everything, because we can see here gold's crushing foreign currencies. Gold performing really well against the equal weighted commodity basket. It did have a correction, bottomed right around the 200-day, rising 200-day moving average, just beautiful action. Gold is killing bonds. And so I think that, like, let's say we go into a stagflation, but kind of it quickly turns into a recession, which I think is likely at some point. The question is timing. Yes, gold would break out against the stock market. And yes, you would see money go back into bonds, but I don't think you would see that much money go back into bonds. Like, it wouldn't be what you normally see in a downturn. So I think that it is an explanation for why gold can really accelerate when it breaks out here against the stock market. I mean, in other words, let me see if I can put this right. The amount of money that would come out of stocks and go into gold is far more than the amount of money that would go into gold and then buy bonds. So there, I got that right. Okay, that's enough for this chart. Let me get to the others. So here we're zeroing in on gold against the various stock markets, gold against the S&P here, gold against the NASDAQ. Here's gold against the equal weight, gold against the world ex-US. So gold's crushing the world. Gold against the equal weight S&P. I have another chart of that, but this is breaking out here. So this is significant. Again, I'll get to more of that in a moment. Here's gold against the NASDAQ. This is weaker than gold against the S&P. We can see this needs more of a move to test, which would be, almost 2-year resistance. But this is way below these peaks here compared to gold against the S&P. Whereas, I mean, this thing is coming up it's getting really close to this resistance, 0.50. Now, let me get to the next chart. Okay, so this is gold against the equal weight S&P. Now, back here, we're using the daily line chart. Here, we're using the daily bar chart. And people, that's why when you're doing all this various charting, you can look at charts in so many different forms. You can look at line charts. You can look at a daily line, a weekly line. You can look at candle charts. You can look at bar charts. So this is a daily bar chart here. And with the line chart, we had this kind of a line here, which is still viable. But if you look at the bar chart, we can see this was the resistance based on the bar chart where you resistance here, resistance again here, one more time resistance. Then it broke through, false breakout. Then it came all the way back to test this support, came up here, paused for a minute, boom. Then it's broken out. So this is clearly broken out. I mean, you could see at some point maybe a snapback here and then a move like that. I mean, that would be super bullish. But based on this chart, this looks to me like a breakout. And also, look at the lows in the moving averages. Went below the long-term moving averages here, 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 but not here. Now, this only tested the 200-day. Now, this tested the 400-day, but I have a feeling after this test and this test that we're not going to see this ratio test even the 200-day anytime soon. So again, maybe this does a retest like this, but if it does that, look for it to turn around and then possibly go like that. So this is a breakout as far as gold against the equal weight S&P. It's just a little positive. We didn't quite have that in recent months, so an additional positive. Finally, of course, it all comes down to this, gold against the S&P 500. And so this gives another look, maybe a cleaner or clearer look at this chart. So we have, it closed at 0.48, and this is a resistance, 0.50, or maybe just a hair or two above 0.50. And we can see it's come up against once, twice, about 3 times. Now it's 4 times. So the more you see this, this tells me that this is going to break through at some point. Now, does that mean it's going to break through next week or next month and it's going to shoot up like that and the whole sector is going to move like that? Not necessarily. You have to look at the context. This thing could break out in the next 2 or 3 months and shoot higher, but maybe you have some problem in the markets and you have precious metals correcting while it's breaking out. Maybe it's just a normal correction. And so it breaks out. After that correction, then you get precious metals starting a major leg higher. So that's just one scenario to consider. So this based on that and of course history, this can be a leading indicator. So it makes a breakout move like that. Again, that doesn't mean that the next week or the next month everything in precious metals is going to surge higher. It just tells you that more likely than not, over the medium term, intermediate term, you're setting up for a real bull move higher. So that's enough of me babbling. I know I always say that, but I can't drone on, so I have to stop myself. But people, that's the key for gold. Or I should say, that's the key thing to watch right now. I'll go back. This chart, just watch this ratio. Keep an eye on this over the next few weeks because if this thing closes above this line, that's a 4-year breakout. That's really, really significant for numerous reasons. So that's all for the video. Let me know what you think about gold against the S&P 500, gold against the stock market. Do you see this breaking out in the next month or two? And do you think it's as significant as I do? So leave a comment. Let me know. Thank you so much for tuning in. And I look forward to publishing the next video for you guys over the coming days. Thanks.